Thank you so much, and thank you for having us both on your wonderful webinar series. Um, I'm going to start just by saying thank you for all coming, and give you a little history about Gideon and GSH, and then let Gideon take it from there. So my name is Lynn Eisenberg, and I'm head of business development and do investor relations for GSH. But I came to GSH first as an investor. I continue to be an investor. I've been a seasoned multifamily investor for 22 years, but I changed my business investing thesis about 4 or 5 years ago and started doing more and more investing in the Midwest after I met Gideon. I've just been really taken by Gideon and the team and their approach, which is extremely transparent, their ability to pivot, to force their foresight in what's coming down the pipeline. For example, they bought a warehouse and saw what was happening with the supply chain. Just on and on. I walked properties before I started investing. I visited their offices. Anyway, just became very impressed by everything that they do and how they do it. And also the fact that they've retained their staff since 2017 in the age of the Great Resignation. I think that says a whole lot. So without further ado, Gideon, take it away. Thank you.
Thanks, Lynn, and good morning, everybody. My name is Gideon Pfeffer, and I'm the CEO and managing partner of the GSH Group. I'm the G in the GSH Group, and we're an owner-operator sponsor, primarily of existing multifamily properties throughout the Midwest and Southeast. So before I get into my presentation, I want to start saying two things. The first one is forgive me, asking for your forgiveness ahead of time. If I go off track, I get really excited about what we do, and sometimes I hit a tangent. So I'll try and stay on task. Actually, there's three things. The second thing is forgive me because I just got over being sick, and so I'm a little foggy in the brain, and I'm a little bit congested. So if you hear me coughing or whatever, I apologize. And thirdly, I just wanted to kind of set the expectation because we have only about 30 minutes together, which is probably just the right amount of time, so I don't ramble too much. But in these 30 minutes, I'm going to talk about GSH specifically, so you can get to know who we are and what we do in our mission. I'll talk about some of our successes, and then I'll talk about the fund specifically. And I'll try and leave, somewhere between 5 and 10 minutes at the end for questions, potentially, if anybody has a question, or if I missed anything, Lynn will maybe bring up some questions. So having said that, I'll jump right in. And, who is the GSH Group? And I'll just start with our stats. As you can see, currently we're sitting on a portfolio of about just over 6,500 apartment units. GSH Group was formed in 2017. My partners and I have been investing in real estate, multifamily, and single family for well over a decade. We came together to form this partnership and build a portfolio, substantial portfolio. And in the last really 4.5 years, almost 5 years now, but really it was about 4 years, including a break we took for COVID. We have purchased over 7,000 apartment units, and we have raised and deployed over $220 million of investor equity. And that is all non-institutional equity up until this point. Up until this point, it's all been friends, family, and families and accredited investors, high net worth investors. And I say that because we enjoy our structure, and we haven't needed to take on institutional capital. But as we move into the future and future growth, those are conversations that we're definitely interested in entertaining. And I think that now that we're launching our first fund, that more and more of those conversations will be welcome. Our portfolio is valued at about $1 billion today. We've had 7 full cycle deals, which include sales and refinances. We've got 29 apartment communities. We're in 5 different states right now. We're in Michigan, Ohio, Indiana, Maryland, and Florida. Our average cash on cash yield to our investors has been above a 10%. We do pay our distributions quarterly. We haven't missed any distributions, even through the pandemic. And our tracked IRR return is well above 25%. That means basically if we sold it today at a conservative cap rate, if we sold our portfolio or our properties, that's where we'd end up for our investors. So my partners and I at the GSH, we come from all different walks of life. We're very entrepreneurial, and we built an amazing team. But we put together this company not just to make money, but to try and provide some sort of social impact. And I'll go through that in a little bit in the presentation. But essentially, how can we do business while helping people and helping out the greater community that we serve? And we do that with 2 things in mind. We look at ourselves as having 2 very important clients and partners. And so that, our first client and partner would be our residents who live in our communities. And we strive every day, all of our staff strives every day to focus on providing a safe and clean and affordably priced apartment community where our residents can call home. And on the other hand, we have our investor partners, and we provide and our investor partners expect an ethical and transparent way to achieve a superior return. And we're doing a good job achieving both of those things. So again, as I mentioned earlier, our trajectory of apartment units as well as equity raised to this point has been steady, but very strong. We're very proud of our ever expanding base of happy investors. And I do say happy. Anybody who's interested in speaking to us more after this event can get in touch with us, and we'd be happy to give investor references of folks who have invested time over time again. And we have investors who get 100K ones a year, who are very seasoned investors with multiple sponsors in the alternative investment arena. And some of the things that our investors will say is that we're great at communication. We communicate on all of our properties and give an update monthly. We do more enhanced more enhanced quarterly reports when we do our distributions every quarter. And then we also do ongoing just what's going on in GSH and what's going on in the market type communication. I also wanted to highlight this slide because, as you can see, $222 million to date of non-institutional equity that we've raised. It's larger than some, and it's smaller than others. But while we're launching our first fund, we're not new to organizing syndications and managing significant amounts of money. So just don't be fooled by us by it saying Fund 1. Up until this point, we've just raised deal by deal. Our operational experience is vast. My partners and I, as well as our executive team, have well over 100 years of combined experience. We've transacted or somehow been involved from a consulting or sales or management perspective of over 251 properties. We've got currently over 800 investors that I talked about before. We've been involved in over 2,500 single family homes that's buying, fixing up, and selling. We've either transacted or been on the sales or consulting side, valuation side of almost 50,000 apartment units and almost 16 million square feet of commercial space. So, and that's across like 36 different states. So we've got a really deep bench operationally on our team that allows us to evaluate deals very quickly, cast a wide net through relationships. GSH is an amazing advantage because of all of the experience that we hold throughout our management team. So we've got relationships with special servicers, we've got relationships with banks, we've got relationships with brokers, and private owners. You know, what's a real advantage today from one operator to the other, you know? And I think it's not only being a good operator once you own the property, but also having access to properties, not just brokered, not just on market properties, but properties that not everyone sees on the open market. And a lot of that is happening nowadays. You know, the term off market is facetious, I think, at times, but it does happen quite often. Last year, we bought 10 deals, and 7 of those 10 deals were off market. And what that means is that an owner doesn't want to go through the entire offering process and have 20 groups walk through their property, but they will entertain a sale if they can get the right price. And so they enlist a broker for a pocket listing, or perhaps a commercial mortgage broker, you know, a loan guy who they have a relationship with, and say, you know, go out to 3 or 4 groups that you know are closers, that you know transact, and that are easy to transact with, and see if you can get my price. And we are now, and have been for years, one of those groups in the markets that we play in, and that allows us to get access to additional deal flow. Having said that, you know, we purchased 10 deals last year. We had to underwrite over 400. So we're not just getting a deal across our desk, trusting the broker's numbers, and then bidding. We're combing through our own pro forma. We're doing rent comp and sale comp analysis. We're visiting the properties, trying to understand the area where the invisible dividing lines are. And especially in a market like today's market, where prices are high and continue to go higher, the potential for rising interest rates and cap rates being so low, we have to be extra careful about where we buy, how we buy, and the prices that we pay. And real estate fundamentals really come into play right now in terms of location, making sure that the assets that we purchase will be good regardless of how the next 3 to 5 years go in the open financial markets. I wanted to share a little bit about, because of the limited amount of time that I have today, I didn't include slides about my whole team, but I wanted to show who the GS&H are. Myself, Gideon Pfeffer, Shmuel Cohen, and Hanan Liss. And if you're interested in learning more, we'll get you a full deal booklet, and you can read about us. You can read about us on our website, gshrealestate.com, and you can also read more about our executive team. And I can't stress our executive team enough. We have a rock star team. I'm grateful to have Lynn on board, and as well with business development, and our operations team, from operations to acquisitions, asset management, transactions, accounting, administration. We just have top-notch people that we've been able to retain by having an inclusive and a fair and a fun environment as a workplace, as well as compensation and sharing in our success. Everybody shares, from our investors to our residents to our employees and team members. Okay, so as an investor, what can you expect? So we like to call our service a concierge approach to investing, and what that means is, whether you're an institutional investor or a professional investor, or just a high net worth individual who's looking to get involved in some alternative asset allocation, we do all the heavy lifting for you. So once we present an opportunity, up until this point prior to the fund, we'd present an opportunity to you or to our investor base or prospect base. You might do a call with a investor relations individual who'd go through the deal, and then there's an intake, and then from then on we handle everything, all the rest from you. So you're not managing property, you're not managing the accounting of the property. You'll get K1s on time, you'll get reports on time, you get transparency, and you get access to our executive leadership team, including myself. My cell phone is always available, and I'm always available to speak to an investor partner should they want to. And I'm moving kind of quickly through these slides just because of the timing. So what do we do besides buying apartment buildings? We focus on workforce housing. We say affordably priced housing, but not affordable housing. So not subsidized, but we focus on our country's essential workforce. And so we all know because of the last 2 years who the essential workforce is. Our business model has always been provide affordably priced housing to those essential workers, which are the teachers, the firemen, the policemen, folks that are service providers and industry people around our communities, who for one reason or the other are not buying homes, either for lack of, for economic reasons, or for any other reason. And so what we'll do is we'll focus on an existing property that needs enhancement, an older property, properties that are maybe 20, 30, 40 years old that have been owned for quite some time and that need some sort of elevation from an interior unit perspective, as well as a exterior common area amenity perspective. And what we try to do is we try to go in and elevate the units and renovate the units up to a top tier so they're very desirable, as well as create an amenity package for the properties that compete with any newer product. And what we find is on older properties, often the unit square footages are a little bit bigger than newer product, and the amount of land that a property was built on maybe 20, 30, 40 years ago, it's much more vast. There's more acreage than what's being built on today. And so we try to provide a competitive set to a newer product by having more walkable space, more green space, more amenities like dog parks and athletic things to do with athletics, playgrounds, beautiful pool amenities and resort-like type outdoor amenities, and a little bit of a larger unit size, and we're able to compete with newer product at a more affordable price. So if a property in Michigan, for example, a new property might go up and be charging $2,500 to $3,000 a month for rent, we try to provide a direct competition just in an older property, have larger square foot in the units and have nicer competing amenities on the outside with more space to move around. And maybe our rent will be $2,000 or, so literally $300, $500, $700 cheaper than a newer product. And we've been extremely successful in that business model.
I just want to add to that, Gideon, that one of the things I really like that GSH does is you have a very strong adherence to your criteria. And that also includes a really good school system and good job employment surrounding those properties, especially that school system element, which is great.
Yeah, absolutely. Thank you. And that's a great point. Thank you for bringing that up. And feel free to jump in also more if you think that there's anything that I'm glossing over or missing. I've got my timer on and we've got 18 minutes already. So I'm fast forwarding through some of our slides so I can get to some of our illustrative assets, and then I'll jump into the fund, and then I'll say thank you to everybody. So, and again, my team is super excited about our fund and super excited to speak to anybody who's interested about learning more by contacting us through Flya and through our contact information, and setting up a time to speak with myself or Lynn or one of our other investment sales representatives. Here's an example of one of the properties that we did that we still own. We bought this in 2019, Colony Club. It's in Bedford, Ohio, outside of Cleveland. We were able to go in, elevate the properties, just like I said, from an amenity perspective and interior units. We're still doing an interior unit value add plan. We took a break during COVID, during 2020. But we were able to refinance out of our initial loan, return 30% of the investor capital, refinance into extremely low debt, actually pay less, pay a lower monthly mortgage payment, and draw out money and pay 30% of our investor capital back already, literally within 2.5 years, because of our operations and increase in NOI. Here's a property that we purchased also in 2019. the previous group had done an amazing renovation. We just went in and managed more efficiently and enhanced some of the amenities in some of the units. And we've literally raised the NOI on this property in a 2-year period by 40%. The property we purchased for $69 million in 2019, and it's valued at well above $100 million today. This is the Meadows on Balfour. We purchased this in 2017, one of the first properties we purchased. We were able to value engineer the expenses and elevate the property from a unit and amenity perspective. We were able to increase NOI by over 60% in the first 2 years. We ended up selling this property, and our investors made a tremendous IRR on sale. I'm gonna scoot through these just from a timing perspective, and I'm gonna talk a little bit about our fund. So up until this point, like I mentioned, we've raised over $200 million on a deal-by-deal basis, and we're gonna continue raising on a deal-by-deal basis. But we've had so much success and so much investor interest that we've been oversubscribing in a majority of our, well, almost all of our property offerings oversubscribed. So we're creating this fund, and we're targeting a modest amount, $25 million, which isn't a huge amount of money for a fund, for 2 reasons, really. One is to provide our investors and new investors the opportunity to get in on our deals, because we are oversubscribing, and it's become harder and harder for folks to participate. But also there are groups, RIAs and other, family offices who prefer to just focus on funds. And so we wanted to give everyone an opportunity to invest in GSH deals, since we're doing, since everybody is benefiting. And what we'll do is the fund, when we raise the 25 million, the fund won't be an exclusive owner of any one property. It will invest in a portion of capital in each of our deals. So if I have a new acquisition that I'm going to purchase, let's say in the second quarter of this year, and I have to raise $20 million, the fund might contribute 3 million of that or 5 million of that, and it'll be a way for the fund to diversify its holdings. Again, we'll send anybody a booklet for the fund that has all of this information. I'm not going to go line item by line item, but a couple of things that I want to point out is that our preferred return is 9%, which is above market. That's typically where we are with our typical deal by deal properties. And all fees are earned at the property level because of the structure that I mentioned earlier. It's a 9% preferred return. There's no catch up to the sponsor. And then the promote split is tiered with 3 different share classes depending on your investment size. So up to a $500,000, it's a 65-35 split, with 65 going to the investor. If you invest between $500,000 and $1 million, it's a 70-30 split. And if you invest above $1 million, it's a 75-25 split. All of our fees and our splits are represented here on this fee page, and you can look at this if you get our memorandum. You can either check in with Flya, and they will connect you to us. You can go to our website, www.gshrealestate.com, and you can fill out a contact form, or you can get in contact with Lynn or I after this.
I just want to add one other thing, is that part of this fund, one of the things I love about this fund is that approximately 10% of it includes some of the equity from the last 7 or 8 deals.
Yeah, so I'm going to jump into that after this slide, actually, Lynn.
Oh,
so
right. Okay.
There are obviously benefits to investing in a fund, and I'm going to gloss over it.
Oh,
but
great. Okay.
What we did was, and there's 2 slides of this actually. So what we did in 2021 was, again, we purchased about 10 properties, and about 7 of them we allocated a small portion of dollars for the fund. So it's a placeholder today, but once we do our first closing on the fund will take position in all of these properties that we purchased last year. And I did that specifically so we can start cash flowing on day 1 on our first call with the fund. And also so, folks like you, the investors, aren't like investing in a new sponsor in something blind. That's a blind pool, with the theory or of what type of properties that we buy. So these are actually properties that we bought that are performing well, that the fund will invest in, and then they're also indicative of properties and markets that we will continue to invest in with new acquisitions. So as you can see, we're pretty well diversified between Florida and Michigan, Indianapolis, Maryland. We're also doing some new construction. As you can see, this Esker Square new construction deal that's underway. These are, so you can see the targeted IRRs to our investors. You can see the average cash on cash return targets to our investors. And the fund will directly benefit from these properties, as well as properties like this that we continue to track and make offers on and aggressively pursue to purchase into the future. Okay, with that, I've got about 4 minutes left. Lynn, do you think there's anything that I didn't touch on? And I'm not really sure if there's a Q&A type of a system on this system, Jeremy.
Yeah, there's actually some questions up here. Lynn, did you want to read them?
Let's see. The deck, well, there is one, will this deck be available? Yes. And then there was a question, Gideon, what kinds of new tech are you looking to deploy at the property level over the next 12 months? And what kind of impact do you expect that to have?
Did you say new tech?
Yeah, new tech.
So, depending on the market and location of the property, we will be, new tech, we do sometimes automatic locks. We'll do Nest type systems for heating and cooling, Ring doorbells at times, not portfolio wide, but if the market and the asset warrants it and our business plan warrants it, we do that. And it's all about creating, in terms of the second part of the question with impact, it's just about creating a competitive advantage to compete with newer product in terms of our business thesis, and providing folks with what they'd expect based on the amenity set and lifestyle of that specific property.
And there's also tech that we're exploring that relates to preventative equipment measures. So that's another software that we're working on. But Gideon, on the fund, could you explain a little bit about how it actually works in terms of the expectations of when capital would be called and when capital would be deployed, and over what period of time?
Yeah, so the fund is set up so we can deploy and redeploy over a 36-month period. So if we were to purchase a property, in the first 6 months, and then let's say sell it in month 18, we could redeploy that capital. So we have 36 months to do that. If you're an investor, you can expect to have no more than 2 capital calls, either 1 or 2. So early, and we expect to make our first call sometime this first quarter of 2022.
There's a question here, I'm just randomly picking. Can you address your debt objectives for the fund?
Yeah, sure. We typically like to get into low interest, long-term fixed rate debt through the agencies. We are also a very heavy value add type of organization. Lynn mentioned it in her intro, but we actually own an affiliated construction company that does all of our CapEx and unit interior works. And we're doing heavy renovations on our most recent acquisitions. So we'll get into debt that our debt target range is between 75 and 85%. And typically by year 2 or 3, we'll do some sort of a refinance or supplemental loan that take us down to a much lower percentage. Usually in our pro forma, even if we're at an 80% acquisition loan to value or loan to cost, within the first year, we're well below 75.
So between year 2 and 4, investors will get a portion of capital return.
Yeah,
And a refi,
our
case by
plan is
case.
always- Exactly, yeah.
Cool. And then another question here, the initial properties the fund has invested in, are they currently owned by GSH? If so, are they all turnkey assets, or will the fund be entering into those deals during a value at play?
All the assets that I mentioned were all purchased in 2021. So within the last 12 months, most of them are in some degree of value add. They are all paying distributions. They're not meeting the preferred return distributions, which we don't typically hit for the first 12 to 24 months. But they are all, and they are all owned by GSH.
Awesome. Can we, could you guys move to answering the questions through the chat so we can go to the next presentation?
Absolutely. Thank you everyone for your time and attention. And we'd love to do follow-up with all of you and anyone interested in hearing more. We'd love to chat with you. So thank you, Jeremy and Michael. Thank you, Lynn, and hope everyone has a great day.
Thank you so
Thank you.
much.